Alright, we haven't had a gap fill combo trade in a while. Today was a good trade for the gap fill combo. Got in at 1350, exited at 1354, the high of that range, the high of that area. 4-point profit target. Currently marked at 1357, 8 minutes until the stock market closes at 2:52 p.m. Central Standard Time here. I want to look at the Cobra 5B. It hasn't traded in a while either. We are long from 1350.50, so we're up about 6.5 points at 1357. Looking for a close here shortly. So this is a profitable trade on the day so far, unless we get a quick reversal at the end like we did in crude oil. Speaking of crude oil, here was the trade. Great entry. Market moves up slowly. We pull back. Don't get in on the exact low. And then we rally huge, almost a whole dollar per barrel. And then the market just turns and goes against us and runs their stop. It's not fun when that happens. We talked about an exit strategy yesterday, though. This exit strategy. If you didn't see it, go to yesterday's video. Let me show you where you can find yesterday's video. If you pull up the website, capstonetradingsystems.com, you will see all the daily reports right here, so you can go through and go back and click on this and you'll get a full list. To get yesterday's video, you click there and we go through the daily report. We go through easy language strategy for getting what I'm about to show you. So what I'm about to show you is the exit dollar trailing profit target. So basically it puts in a dollar trail stop loss once it hits a certain profit target. So once, in this example yesterday, once we hit $350 max profit per trade, we put in a $200 trailing stop loss. And so this is the strategy. I show you how to implement this into easy language and turn it on. Turn this on. Boom. Would have got out a much better exit. And I'm considering changing this strategy for the portfolio going forward, but right now I have not. I've included this for your own research. You can use this with your own discretion, or modify it or test it on your own strategies if you want, showing you an exit strategy. And just in a really choppy market environment right now, nothing sticks, nothing tends to run. Example today, we're still looking at the Cobra 5. We're still looking at the S&Ps. We have a strong market, but it's not pegging highs and closing on highs. There's lots of give back. Yesterday it did this. The day before it just gap up, rallies, and then it goes sideways and sells off, and then it gaps up, goes down. The price difference between here and Tuesday's open, 1357, 1335 area, about 20 points. It's a good trend, but the sustainability between opens and closes, there's not as much open on the low, rally, close on the high that you want to see in a strong market. You've got the low here, the high there, but the open to close ratio is more compressed. And so still looking for a market that takes off and has much stronger trends and closes on the highs, and we could get that, and we could get a much stronger market if this market continues higher and we approach new highs. We're about 200 points away on the S&P from all-time highs. 1570 area is around all-time highs on the S&P. So that is the report for today. Let me know if you have any questions. Actually, there is one more thing I want to show you, and that is soybeans day trade. And I want to minimize this chart. All right, here it is. We had a great trade in soybeans today. Got short at this area right here. It's sometimes hard to click on these numbers, but we have a profit target at 950, so it's almost a $1,000 gain. And I want to show you the performance summary for soybeans since the beginning of electronic trading. This started trading in August the 1st, 2006. Was the beginning of real-time trading for soybeans electronically. Previously it only traded in the pit, and on August 1st, 2006 it started trading electronically. Here is the overall performance summary for soybeans day trade, soybeans Python that we have. It includes $25 slippage and commission on this number. We have that shown under the settings, $25, and 34,000 dollar profit, $8,000 drawdown. In recent years, it hasn't done good since it peaked in '09, a year and a half ago, and it just hasn't. It's just something that we haven't been interested in because of this downtrend. So we stopped looking at this some time back, but this uptrend has started up again, and it's had a really good month. Looking at the monthly returns, 28.75 on the month. Get more volatility and more directional trend in this market. This system could work really well also. Um, so just taking a look at the annual returns, 2010 was bad. So there's been some years when this has done really well, and it's something that could be turned off and on. It still has a lot of validity to the strategy. Let's look at some of the trades. There's today's trade. There's 2 long trades, some more long trades, another short trade, another long trade. There's a loser right there. There's a winner, loser. So it's taken a lot of trades lately more profitable than non-profitable. There's a series of losers on the short side. Soybeans has been strong. Long, short. There's some winners. So that is soybeans, and I want to share that Python strategy with you. Something that I'm watching but not trading yet. So keep an eye out for soybeans, and if you're looking for a strategy, consider a Python-based strategy.